Bring in now Glen Kacher. He's the founder and CIO of Light Street Capital, former analyst at Tiger Management as well. Welcome. It's good to see you after I know it's been a tough weekend for everybody.
Thanks very much. I appreciate that, Scott. And, I think it's our job to first start by thanking the Treasury, the Fed, and the FDIC for stepping up and backing these deposits before the open this morning and even before futures opened last night.
You seem to be somewhat critical over the weekend of the venture community when you tweeted, perhaps the venture community should step up and fund the bank that supported the making of billions for the last 40 years. The implication being that, this is a bank that made many billionaires out there, and that at a moment of crisis, many of them ran the other direction. Am I right to suggest that that's where you were channeling your thoughts?
Well, I think it's less about how we got here and more about how we move forward as, a community and as an industry. And, if you look at it constructively, when I started Light Street Capital, 13 years ago, I walked into the branch on Sand Hill Road and opened an account in 5 minutes, told them who I was, what I was going to do, and I had an account and started my business with that. And, and this bank is really a part of our community. It may not be a money center bank to the rest of America, and it may not be a household name, but this is the money center bank for Silicon Valley, and we need that. And so I think it's up to us as the individuals and firms that benefited from this bank for 40 years to step up and back whatever the successor is going to be.
What happens now? How are you thinking about the markets from here? I'm sure you had some chance to listen to Brad Gerstner a bit on his thoughts about, worrying that we're not totally out of the woods, but looking at some of these dislocations for possible opportunity. What about yourself?
Well, to Brad's point, we have a roadmap for how depositors are going to be protected and how management teams and risk managers that were running the asset side of the house are going to be dealt with or where they're going to end up. And so we understand kind of, I think, and these things can change with time, kind of the way, the pathway for things to happen. So, I think then you say, well, what's the Fed going to do here? We're probably at too low rates for too long, which created this glut of cash that needed to be invested. And now when the rates went up quickly or over the last year plus, it did break something, right? And so now the Fed probably has to sit back and say, how are we going to behave now? Okay, we're not going to hike rates as quickly probably as we were planning on doing. And therefore, what does that mean? Inflation probably is going to be a little bit stickier. And so then you have to look at the federal government and say, from a fiscal policy, is the federal government going to continue to do inflationary things, which they have been doing, and hopefully they rein it in and take some responsibility for helping shrink inflation. I think the Fed did obviously have an effect already on the growth of the economy, and while it may not have shown up in all the measures, as the chairman has talked about, it takes time for those changes to show up. So we'll see. We'll see what it does for the companies in our industry, the companies in the banking industry, and really all the customers of the technology companies that we're investors in. So I'm not sure we know exactly from a macro point of view where we're headed. But what I do know is that today we're in a lot better spot than we could have been if action wasn't taken over the weekend.
I think there are many people who would agree with that statement, obviously. So you have a lot of exposure within the tech space. It's primarily what you do, right? Tech and media, but with a real heavy leaning on tech.